Hi, welcome to today's video. Doesn't look like it's totally in focus, but today's video is on inventory. We're looking at year-end costing, periodic inventory example. And so I hope you can see it well enough. This will be a little bit longer video perhaps, and a little more complicated due to the numbers. I tried to write this as best I can so you can see it. So here we go. First thing we've got to know is the formula. Beginning inventory plus purchases equals cost of goods available for sale. And notice I said this is what we must account for. If we continue on with our formula, our balance sheet formula, cost of goods available for sale will equal to ending inventory plus cost of goods sold. So if my duty or my job is to figure out what the year-end value is using Lifo, Fifo, or average cost, in here I'm just assuming periodic inventory so we don't have to factor in the dates of sale. I'm trying to make it easy here on this webinar. There are certain steps that we need to follow. And so we're going to look at a periodic example. You can factor in the same idea with a perpetual example to a certain degree. So our example is going to assume that during the year we had three different purchases. We bought two at $3, which was 6, three at $4, which is 12, and two at $5, which is 10. That came out to 7 purchases and $28. That is our goods available for sale, assuming no beginning inventory at all. Don't worry about dates here. We're trying to just look at something really very, very basic. So now that I know that I have purchased 7 and 28, I need to go through steps. And the steps here are first to figure out how much I must to account for. Well, I just did that by 7 items and $28. 7 items is the most that I had throughout the year, and it cost me $28. However, hopefully during the year I made some sales. So the second step is to take a physical inventory. So I did, and the ending inventory was 3 units. If the ending inventory then is 3 units, what does that mean? Well, if I had 7 at the most and 3 are left, then I must have sold 4, right? So sales were 4 units. Now let's go to the third step. It says figure cost of goods sold. Now I know the textbook and many other people say figure out the ending inventory, but again, remember your formula. I know what I must account for, and that has to go, that $28 and 7 items has to go between the ending inventory and cost of goods sold. So if I figure out cost of goods sold first, and I know the goods available for sale, then I automatically know the ending inventory because it's just the difference. So let's look at Lifo. What does Lifo say? Lifo says last goods in or first goods out, or last goods in or first goods sold. If I sold 4, then I need to go back here, look and see which ones were the last goods in. Assuming, let's put some dates here, so we'll say this was 4/1, 5/1, and 6/1. Just so that we have some dates. So we're going down over the course of the year. So the last good in was 2 at $5 each, which was 10. So the last goods in are the first goods sold. So that's 2 at 5 or 10. Going back in time, that's 2 at 4 is 8. I've exhausted the number of units. In other words, I go back layer by layer and exhaust the number of units. So I exhausted the first layer, 2 at 5. I came to the 5/1 layer. There were 3 at 4 there, but I only had 2 more units to pick up because I've already done 2, already accounted for 2. So that's 2 at $4 or 8. I've exhausted all the sales because now I've accounted for 4 units, and it totaled $18 in Lifo. So $18 was was the total. I have to account for 28. I've accounted for 18. So that means 28 minus 18, or 10, would have to be an ending inventory. I've accounted for 4 out of the 7, which means there's 3 units in ending inventory. Well, let's just look at a proof. So that would be 1 unit, which we haven't accounted for yet on the May 1st purchase, at $4, so that's 1 at 4. And the 2 here at 3 we haven't accounted for, so that's 2 at 3 is 6. 6 and 4 is 10. So we've accounted for those 3 items and the $10. And as you see, that's the same as what was up here. So again, first thing you do is figure out what you have to account for in total. Then you figure out, well, what is the cost? Then the difference is going to be my ending inventory. That's what's left. Remember that cost of goods available for sale, what I must account for, minus cost of goods sold, which was the step 3, gives me ending inventory. So I really just take a difference there, and I know my ending inventory. FIFO, first goods in or first goods out, or first goods in or first goods sold. So the first goods in here were 2 at 3. So that's 6. I've exhausted that layer. Come down here and take part out of here, 2 at 4. Which is 8. I've figured out all my sales of 4 units. That adds to $14. So my sales, or my cost of goods sold, the items that were sold, are $14. That means that 28 minus 14, or $14, are left in the inventory. So let's account for those. So there's still 1 here at the 4, so that's 1 at 4. And then we have these 2 left here at 5, so 2 at 5 is 10. And that adds up to $14. So the 3 items add up to $14. Average cost. What does average cost say? It says that it wants an average of all the different cost layers throughout the year. So we have 3 different cost layers throughout the year. We bought $28 worth of items, and it was 7 items that we bought. 28 divided by 7 comes out to an average cost of $4 per item. If we sold 4 units at $4 per item, then our cost of goods sold would be $16. 4 times 4. That leaves then 3 units left at 28 minus 16, which is $12. So our ending inventory is $12. Proof of that is that there are 3 left at an average of 4. 4 times 3 is $12. So, again, what are the steps to figure out how much under LIFO, FIFO, or average cost is in ending inventory? First thing, figure out how much I must account for, which is cost of goods available for sale. Second thing, take a physical inventory. Third thing, figure cost of goods sold. And lastly, take a difference, and that is your ending inventory. I hope this makes how to calculate easier. That is the goal of this example. It's still a complicated process. I hope this makes it easier, takes a little bit of the mystery out of the calculations for each of you. Take care. We'll see you on the next video.